All right, so what I mean by continual inventory purchases. Now, this is very relevant, especially when we're dealing with perpetual inventory, is that because we have this key factor where if every purchase that we make, we need to update our inventory. So therefore, every time we sell a product, we also have to update inventory. So it's very important that we understand that sales is definitely something that we need to keep track of, especially when we're dealing with this type of inventory. So of course, like we've seen before, sales is is one of the main core operations of generating income, especially as a merchandising income, right? Or merchandising type of business activity. So in this case, right, we're looking at the nature of a business and trying our best to convert our goods into sales, which then sales turns into cash. So when we're looking at determining what a selling price is, it's generally supposed to be the general overall cost it takes to get the item to the store, plus an additional type of profit margin. You never want to sell your product at original cost, because then you don't want to break even. Your goal is to make a profit. So if you purchase, yes?
I'm sorry to interrupt you. I don't know if it's me, but it doesn't look like you're sharing and there's something on top of your presentation. We can still see your side, but at least there's nothing
The
on it.
nature of business, sales. Okay, so do you need me to go back?
No, that's fine.
Okay,
Thank you.
so here, right? So our goal is that we never want to break even. You want to always try to make a profit. So for example, right, if I buy something for $1, I can turn around and get a 400% profit by charging $5 for it, right? So that is exactly what the goal of sales is, right? Especially when we're looking at a merchandising type of business activity. We want to purchase or make a product and sell it at a reasonable price to get the maximum amount of profit. So in this case, right, that's exactly what we're looking at. We're looking at selling a product. So with that being said, we have to also consider that we are going to be like a store, right? An in-store store, or even an online business, right? And we're going to be charging sales tax. So for this class, I just need you to know 8.25%, okay? Now again, I'll talk about sales tax a little more in depth when we get into the QuickBooks section, but sales tax is going to be depending on the state that you are doing business in and the local county that you belong to. So once again, the 8.25% could be universal, could be very different depending on what state and county you're doing business in. Okay? But I want to keep it simple and do 8.25%. So here is going to be the example on June 1st that 10 toys were sold for $9.99 each. Sales tax is 8.25%, and the toys were originally costing for $5.85, which, right, is what it cost us to purchase. So excuse me, I think someone is coming in. Okay, so when we talk about sales, right? It's exactly just like how we did in periodic inventory, except we have a second feature, okay? But first, let's just think about how we're going to journalize our sales, right? Pretty straightforward, right? So our assumption is we should be receiving some sort of cash or placed on an account, right? Sales and sales tax. So what is my total amount of sales here?
So to the total toys, we're gonna be adding the tax, correct?
Um,
You said.
yes. So it's going to be we're going to sell the toys, and we're also going to charge tax. Okay, so under the perpetual inventory, there is an additional journal. So let's focus on the first one, which is recording the actual sales.
So including the sales, the tax, and that does say
That
10
is,
toys,
yes,
right?
that
10 toys were sold at $9.99 each. Okay, so 108.24, $108.24. That includes that.
okay, so good. So, anyways, when we talk about the second portion, we're going to talk about cost of goods sold in a second. But yes, that is correct. We're going to, right, assume that we're going to be collecting cash, right? Our total sales plus our tax, which we've calculated already. So, 10 toys at $9.99 is going to be $99.90 plus $8.24 gives you 108.14. All right. So that's just calculating the sales. Now, I've mentioned before, right? Every time we make a sale, right? We also need to calculate what it takes to cost. What does it cost us to sell the item? So that's where we're going to be introducing to an account called cost of goods sold, right? And when we sell our product, we're going to update our inventory. So we're going to be taking it out directly out from our inventory. So in this case, right, if each toy cost me $5.85, right, it cost me to purchase, right? But I'm selling it at $9.99. Okay, so that's my cost plus an amount of profit. Now, how much did it cost me to sell those toys? Those 10 toys.
I'm confused by the question. How much did it cost you to sell the
Correct.
toys?
If I originally purchased each toy for $5.85, how much did it cost me to sell 10 of them?
It's 58.50. That's how much you pay for 10
What?
toys. If each one was
Mm-hmm.
5.85, is that what
Mm-hmm.
it is?
That.
58.50.
So she bought them. So at wholesale you buy them at 58.50.
Yeah.
So
Mm-hmm.
10 toys.
I
Yeah.
originally purchased
Okay.
like a bunch of toys for $5.85, right? I just bought a bunch of toys, and each one cost me $5.85. That's my cost of goods sold, or my cost per item, right? Now the question is, if I sold 10 of them, how much did it cost me to sell those items? If I sold 10 of them, how much did it cost me to sell those items? Right? In this case, if it originally cost me $5.85 for one toy, and I sold 10 of them, therefore, I just multiply those two numbers together, and this is what I have to take out from my inventory because this is what it cost me to sell 10 items. But to the customer, this is how much I sold the 10 items for to a customer. Because I marked up my price from $5.85 to $9.99. So what I sell to my customers, as you guys remember, right? If you sell to your customers, you're not breaking even. You're selling to your customers at cost plus a profit margin percentage. So in this case, right, it cost me $5.85, but I'm going to turn around and sell it back out to the public for $9.99. So therefore, I'm getting probably around 40% profit right there.
Right. So you tagged on an additional $4.14. retail
Correct.
price.
But so
Right.
this is looking at two standpoints. One is how much did I sell to my customer and how much did it cost me to sell those items?
And see, and that right there is where I'm getting a little confused. I can see where the profit margin is, but I don't. But I'm not seeing how you coming to determine what it actually costs you.
Okay,
The price markup is $4.14, but I'm not seeing where it actually where the cost of goods sold and what it actually costs you the merchant to sell
okay, so do you remember periodic inventory when we had to calculate the cost per item?
and isn't that adding on that extra 10 cents or something like that, or 10% or something of that nature? And
Okay, so if you remember when we purchase our inventory, yes, every single cost it takes to get the asset to the store. So if it includes shipping and handling, you need to include it. If it includes freight, then yes. And when we did that, we calculated each item and how much it cost for selling each item. And that's exactly what the $5.85 is. It's the cost per item. That's what it cost me to purchase those items.
right, per toy.
Right.
So is that the answer? Is it the $5.85? That's how much it costs you to actually sell the
That's only
toys?
one toy. That's my cost per item.
Well, the total would be
Correct.
$58.58. So
Actually, not to sell. This is what she was trying to say is like 585 is the original cost that cost you when you buy those
hold
toys
right. So
before you
per
sell it. So that's
so
not a selling, that's cost of goods sold. The cost
so that's
how
what
much
she
it,
bought. That's what I was saying. That's what she purchased each item. $5.85 per toy is what she bought each toy wholesale. Now, if we're
yeah,
talking retail, right?
yeah,
Okay. So she asked, what is the cost? What did it actually cost her? That's what I'm saying. For
yeah.
10 toys of $58.50, is that what it cost you to sell the
Correct.
item? The
Not to
purchase.
sell, to buy the item.
Right. No, that's correct. How much
Okay.
To bring the
so
item to
that's
the
exactly
store.
what I'm trying to say is that's what it cost me to sell those items.
Okay. $58 and
Correct.
fifty cents. All
And
right.
then
So
from there I have to take it out of my inventory because that's how much I sold. That's exactly because my original that I purchased, right? I gained inventory,
yes.
right? Now
Right.
that I sold the items, I have to get rid of my inventory. So this is exactly how much it cost me to sell those 10 toys, and therefore I need to take it out of my inventory because I sold
Okay.
10 of those items. I don't have those 10 items anymore. So therefore I need to calculate how much it cost me originally that I got rid of because I sold it to a customer.
Okay.
In this case, we're looking at both perspectives, retail and what it cost me as the store owner. All right, we're not looking at profit. That's not until way later on. But here, this I decided to sell my toys at $9.99, knowingly that it's obviously including a profit margin. Hold on, someone's trying to get in the class.
You're looking at the profit margin.
No, because she didn't mention what the profit margin, and I just stated. I know she wasn't looking at the part was if the, but I got what she's saying now. She did
Yeah,
ask. She what she was asking was how much, pretty much how much did it cost her to purchase the toys to be able to sell them, and that is the $5.85 per toy, which times 10 is $58.50. So I understand what she was saying now, but I was trying to get to that part. You know what I mean?
you're already ahead of us. There is a profit margin hidden there. It's not mentioned,
It
right?
is. The
Yeah,
profit margin hidden there is the $4.14.
yeah,
That's the difference. But I understand she was asking basically what she if we were in the store Normally, if you buy in bulk, you buy wholesale. So what she was basically asking us, well, how much did it cost me to purchase these toys wholesale
Instead of how much did it cost me to sell them?
versus how much? Right, exactly. So I understand. I got it now, though.
Okay. All right. So in this case, right, we're not looking at profits. We're not looking at anything. We're just looking at what happened. Here, I sold some toys, right? And then now I'm looking at how much it cost me per toy that I sold. So in this case, it's $5.85 because that's what I purchased originally, including everything. That's what it's my cost per item is going to be. So every time I sell an item, it's going to cost me $5.85 per item. So in this case, when I sold 10 toys, it's going to cost me $58.50, and I have to update my inventory because I no longer have inventory anymore. I sold it. I sold 10 of those items, okay? And this is going to make more sense when we dive into chapter 8.1 when we actually look at how to use the inventory table and how we actually get rid of our inventory and how we update each one, okay? So but right now, this is what perpetual sales journalizing looks like. You're gonna journalize the sale, and you're gonna journalize the cost it took you to sell that good. All right, the cost of goods sold, which once again is you're looking at what it originally cost you to purchase those items, and you're gonna take it directly out from inventory. All right. Any questions here? Because that's it.
So what's your total? Is it 166.64? Do you subtract what it cost you to sell the item? The 58.50 from the 99.90 and the 8.24? Do you
No,
subtract
we're
that
not
from
looking
that?
at profits until way later on. It
You're just looking at the cost of it, what it costs the company to
right,
sell the item. Basically,
right.
the
We're
cost
not.
of goods sold.
When we dive into chapter 13, right? When we reach the end of our our what do you call it? When we reach the end of the accounting period, that's when we determine by running a profit and loss, or also known as the income statement, right? Where we take
You say we're not doing profit,
not now.
right?
We're doing profit in
Oh, okay.
10 weeks. Yes.
Later.
Okay, so I do have a question then, because if we're not looking at it, then why are we including it in the journal? Because you have the total of toys sold was the $99.90 and the tax is $8.24. Why are we including that in the journal if we're only looking at the purchase of the
Where, okay,
merchandise?
so Inga, I'm going to ask you a question. Where am I journalizing my profit?
You're
Exactly.
not.
Exactly. I'm not
So
looking
you're
at my
doing
profit right
profit.
now. I'm looking at exactly what the
Well,
transaction is, which is I sold something, right? I did my sales. I'm charging my customers at $9.99. But because this is perpetual inventory, I'm constantly updating my inventory. Therefore, so I know I can keep track of if I purchase 100 toys and I sold 10 of them, I have to keep track of that 10 items I sold. And in order to do that, this is exactly what I have to do. I need to calculate how much it cost me for those 10 items to update my inventory so it reflects that I have 90 items left. That is what I'm doing right here.
okay, I think you answered my
Okay?
question.
I'm not looking at profits because the purpose of perpetual inventory is we're constantly updating our inventory. We need to know how much we have on hand at all times. So if I purchase 100 toys theoretically, right? And I just sold 10 of them, I need to show in my books that I got rid of those 10 items. And in order to do that, that's exactly what I'm calculating is how much it costs me to sell those 10 items. And so then I can go into my inventory and update it to reflect that now I have this much items left. Okay?
I
Yes.
have a question. So in perpetual inventory, you're
Mm-hmm.
constantly recording
Mm-hmm.
your sales, and that's why we are journaling that we sold 10 items, and also the taking it out of our inventory, because you're constantly doing
Correct.
that as you
Correct.
sell
And
items,
when
and that's the point of the work that you're
correct.
doing right now, recording your sales and recording how much did it cost you to bring the goods to the
Exactly.
store.
Yes. But just to get rid of it as well, to update my inventory at all times.
So at all times you have an updated inventory of what you're supposed to be having at
Correct.
hand.
And I need to teach you this first because when we dive into chapter 8 and we actually take a look at the inventory worksheet, you're going to have a column that says cost of goods sold. You're going to have a column that says inventory on hand. And what we're going to be doing is we're going to be calculating left and right. Okay? Right now, this is just an example. I'm telling you right now that each item in my batch of inventory is going to cost me $5.85. But of course, when we deal with sales, right, selling out to the customer or selling it out to the public, we're going to charge a lot higher than $5.85, right? Because we're trying to make a profit. In this case, right, I'm just journalizing the transaction at hand. I sold 10 toys at $9.99. Boom. There's my sales for $9.99 plus my sales tax plus whatever or giving me a grand total of how much cash I got. But because the idea of perpetual inventory is we're constantly updating, we need to know how much items we have on hand at all times because the idea is we're keeping track of it, right? So therefore, I need to calculate how much it cost me to sell those items, or in this case, how much it originally cost me to purchase those items originally. And in this case, it's $5.85, and I sold 10 of them. I got rid of 10 of those items. So therefore, I need to calculate that in order to go ahead and credit out my inventory, taking those 10 items out from my inventory. All right. I have to do this if I'm doing a perpetual type of inventory. And again, it just depends on what kind of item you sell. Do you care to keep track of it? Is it something that you're constantly buying, that you're constantly selling out? Then yes, it would be ideal to use perpetual inventory because you want to know to make sure that when you do sell your items, that you know exactly how much you have in the inventory in the first place. You never want to just guess and say, okay, yeah, I should have 50 items left, and you go into your inventory and realizing that you only have 45. No, you should know by doing this, by using perpetual inventory, you should know exactly how much you have in inventory on hand at all times. Okay? So that's exactly why when we're dealing with perpetual type of inventory and when we deal with sales, this is what you have to include. You need to include the original journal of you selling the product, and then you need to include a second journal that calculates how much it costs you to sell those items so you can take it out of your inventory and update your inventory. All right? Everyone good here? All right, so once we've done this, right, we also have to consider, well, we have to deal with sales returns and allowances because that's what it comes with when we sell out anything. Any kind of product that you sell, we have to assume that there are returns and allowances. So customers can return for any reason that they feel like it, right? They can return it because they're just unsatisfied with the product overall. The product could be broken when they purchased it, right? It could be defective, or they just simply just don't want it at all. Maybe it was a gift and they gave a gift receipt, so they came back to the store and said, "I don't want this item at all," right? This happens. That's the whole purpose of selling our items, but we also have to know that our customers are not going to be 100% satisfied. But we also, on our hand, our purpose of selling our items is to make sure that we keep them sold. Because if we allow customers to come in and return as much as they want, whenever they want, they might buy the product, try it, use it, and then bring it back and say, I don't like it. I want a full refund. And then you're defeating the purpose of being a merchandising selling type of business, because you're not selling a product. You're allowing a customer to use your product and come back and sell and return it, giving them all their cash back. So in this case, we need to make some kind of company policy that restricts the limitations of how much a customer can return. And usually they give you a time frame, right? It could be 15 days or 7 to 15 to 30 days, or QVC does, I believe, 90 days, 60 to 90 days. So that's just an example of a company policy that restricts, and it doesn't allow customers to go ahead and take advantage and return the product at any given time, right? Other company policies could be final sale, no cash back, but we can give you some kind of store credit to make sure they keep them coming back to the store, and at least instead of selling a specific product, they could potentially purchase another product in the same store. Or they can do exchanges for even amount of dollars. So one thing that you have to do is you want to keep your product sold, and you want to keep your customers happy as well, right? Making sure that they follow within the within company policies, right? And of course, when we have this, we also have to remember we need to give back their tax. Why? Because tax is not even our money. Tax is the money that the customer pays to the government, and we're holding on to it until we make a payment to the government. However, if a customer decides to return a product, we are obligated to give back their sales tax money, because that's their money that they invested into the sales tax. So therefore, we must refund it back as well. Okay? So let's go ahead and practice once again a perpetual sale type of example here. So here on May 1st, right, you sold 50 coffee mugs for $5 each, okay? And the coffee mugs cost you $1.25, okay? Sales taxes, once again, is 8.25%. Customer A pays with cash, okay, for these mugs. So let's go ahead and journalize one thing at a time. So let's journalize the sale that happened, all right? So customer A, how did they pay? They paid with cash, right? When we deal with sales, right, we need to journalize our sales and our sales tax, okay? So let's go ahead and determine what is my total amount of sales, what's the tax, and how much money am I going to be receiving in grand total. So in this case, it's focused on sales. So if I sold 50 mugs at $5 each, what is my total sales? $250. Now, how much is going to be taxed? $20.62. You might have to go up, I think 63. It might be 2.5.
Let me see. Hold on one sec.
Okay, so then in grand total, how much should I be receiving? What should I be receiving from customer A? $270.63. Now, that was just dealing with the sales. Now I need to update my inventory because I sold 50 items. I got rid of 50 items. If each cup cost me, right, I purchased it from my vendor, it cost me $1.25, including all freight and whatever, right? That's my cost per item. So here, If I sold 50 items at $1.25, what is my total cost of goods sold? $62.50. Correct, right? 50 times $1.25. So that's how much it cost me to sell 50 of those mugs. And therefore, that's exactly how much I'm going to be taking out and updating my inventory. Okay? So now let's see what happens. So a couple days later, right? May 10 rolls around. Okay? Customer A decides that they want a refund, right? Because they want to return 10 of those coffee mugs. Okay? And they're demanding for a full refund, right? And of course, the company policy says that we could give them a full refund within 15 days, right? So if the coffee mugs still cost you $1.25, right? Now let's go ahead and record this transaction. So first, let's focus on just returning the product, okay? So customer A is returning 10 of those coffee mugs, right? So we need to refund them the money. So how are we going to treat this, right? It's going to be the same as periodic inventory, right? We need to create a contra account for sales returns and allowances, right? We also need to calculate how much tax we're going to be giving back because it's based on the selling price, the total amount of selling price, not individuals, right? And then therefore, we got to determine how much cash we're going to be giving back customer A because they paid us in cash, we give them back in cash. So in this case, if I sold each cup at $5, how much money am I giving them back? Okay, so let's calculate how $50, okay? How much tax am I going to be refunding? Correct. So therefore, in grand total, I'll be giving them back $54.13. Okay? Now, they're returning the product back to us, as in they're giving us back the cups. So what does that mean to us? Those cups are going back into inventory. So in this case, if each cup costs me $1.25, I have to put it back into inventory. So in this case, I'm going to do a reverse transaction. Okay? I'm going to debit my inventory because I received inventory, right? I'm getting inventory back. Or in this case, I have to put these 10 mugs back into inventory. And I need to reverse my cost of goods sold because in this case, I didn't sell those items. They're being returned. So in this case, if it costs me $1.25 each and I'm returning 10 of them, how much am I putting back into my inventory? $12.50. All right? That's what happens when we're dealing with a customer that wants to return a product. All right? And that's what you need to do because in this case, I'm actually receiving the inventory items back. I need to re-update my inventory because I have to put these items back into my inventory. Okay. Now, of course, as hypotheticals, obviously you wouldn't be putting it back into inventory. You would create a separate account because these items, we don't know what the customer did to these items. They could have used those cups, drank out of them, washed them, and say, hey, I don't want these cups anymore. Right? We don't know. So those are going to probably be in refurbished items or used items, or maybe those are cups that we can, mark down prices for because they've been used, they've been touched, whatever it is, right? They've been opened, as they always say, right? However, that doesn't mean we can't sell them back. They're just coffee mugs, right? They're not damaged. They're perfectly fine. So in this case, right, we're just looking at just the concept itself, not what really happens in real life. But in this case, yes, I will be putting it back into inventory and I would be undoing what I sold. Okay? So that's that, right? But we also have to look into consideration of what if I give them an allowance instead? So on this example here, May 18, customer A wants to return 10 coffee mugs for a full refund, right? But the company policy says that you have to return within 15 days, which they missed, okay? However, right, they're complaining and things like that. So you decide to give them an additional 15% discount so then they can keep the items, be satisfied, right? And they get to walk away with some money back. All right? Of course, that's for small businesses. If you're a corporate, you can't do that. But for small businesses, you can haggle prices. So in this case, I'm going to give them a 15% discount off of those 10 mugs that they're trying to return to me. All right? We know that customer A paid in cash, right? They missed the return policy date. So obviously they can't get a full refund. So in this case, I'm offering a 15% discount. So, same thing here. We're going to create the contra account, sales returns and allowances. We're obviously, right, because we're giving a small portion of the money back, we also have to give them a small portion of the tax back. And of course, their cash. So in this case, right, attempting to return 10 of those coffee mugs if it costs me $5 each, but I'm only giving them a 15% discount. How much sales am I actually returning? What was that, Nathan? $7.50. All right, good. How much tax is going to be on those $7.50? Oh, wait, hold on. Oh, wait, 15%. Yeah, so how much tax is going to be on that $7.50?
Like 62 cents?
I think it's a little lower than that. So tax on $7.
$7.50, right? Yeah, 62 cents. You have something else?
Anybody else?
That's what I got too. I got 0.61875.
Okay. Sorry, I thought it was 13 cents, but okay. Yes, so in this case, cash, we're going to be giving back $8.12. Okay, so 62 cents on the $7.50 is what we're giving back for tax. So therefore, in grand total, I'm giving the customer back $8.12. Okay, now the question is, do I need to do the second one? Do I need to update my inventory? Okay, why?
Yes. Oh, you're not putting anything back in inventory, so no. They kept
Correct.
the mugs, right?
We told them keep the mugs. We'll give you a 15% discount and keep you satisfied. Just keep the mugs. So therefore, there's no need for a second entry here because we're not putting anything into inventory, nor are we taking anything out. So in this case, not putting back anything in there, no need to calculate or undo the cost of goods sold. Okay. All right, any questions here? Okay. So, of course, when we have sales, right, we took a look at sales returns and allowances. We also need to look at how we can give discounts because majority oftentimes you want to give incentives to your customers to come and buy your product. Now again, a customer's not willing to pay full price. They're more likely to buy your product if it's on sale, okay? So of course with these kind of, promotional deals, you definitely want to entice your customers to want to come into your store and buy your product. So therefore, running a weekly news ad, right? Having a grand opening sale, having flyers, whatever it is, right? To promote yourself, to have a sale, and your customers will come in and purchase all your items, right? We're going to be looking at two different types of sales, right? In-store sales and what if we give our customers some sales. Okay, so again, we'll look at terms again, especially when we're giving terms to people that place orders or place purchase items on an account. Okay, but in this case right here, right, we're going to take a look at both scenarios. So let's focus on the in-store, right? So let's say you threw out a promotional advertisement and you are having a store-wide sale. So in this case, right, on June 1st, okay, your store is having a promotion that all items are 40% off, okay? And a customer decides to buy 10 baseball hats, which cost, which originally, the originally selling price sells for $10 each, okay? And sales tax, once again, is 8.25%, and each hat costs you $2.50, okay? So let's record this transaction. So once again, let's take a look at the first section, which is recording the sales itself, okay? So in this case, what should my journal look like? All right.
So you have a cash sale for $40.
Cash sales for $40. Okay, so not $40. But cash sales does come first, yes.
Cash.
Okay, so that's for sales, but my question is, how am I going to journalize just the journal itself? Like, what should I be recognizing?
Okay, cash, sales.
Okay, and you're missing the sales discount. So that's the first thing, right? We're going to recognize sales, right? Sales tax payable, and of course, cash sales discount. So again, sales discount is a contra account to sales, right? It reduces the sales. So in this case, right, let's calculate how much it cost me originally, or I'm sorry, what my selling price is originally at $10 each. So if I sold 100, I'm sorry, I just said the answer. If I sold 10 hats at $10 each, my total sales is going to be $100, right? Now, but the whole sale or the whole store is 40% discount. So therefore, what should be my sales discount? $40, right? And in this case, right, I can only tax on the amount that my customers walk out the door with. So in this case, I can't tax at $100. I can only tax at what I'm selling. So in this case, $100 minus the 40 gives you $60. I can only tax at $60.
So you want the total or what the tax?
You could give me the total if you'd like.
$64.
Okay, $64.95. Okay, so that's correct, right? Because here, tax is going to be $4.95 off of the $60. So this is exactly how you're going to journalize the sale, right? We need to consider that sales will always be final, right? When we talk about the going concern, the going assumption, that's we would be continue doing sales no matter what's going to happen. So in this case, we're continue doing business as usual, right? We're charging our customer at original selling price, right? But then in our receipt, right, we need to reflect that they receive a discount, okay? So therefore, we're going to charge at original price, but do a contra account or a line item that displays how much the discounted amount is going to be. And then you're going to charge tax off of the discounted amount, which is $60. Okay? To give you a grand total of cash that you should be receiving would be $64.95. Okay? Now, let's recognize this. The discount here is going to be a discount on the profit, okay? Not the original cost it cost you. It's the cost is going to still be the same because we're looking at you're making a sale out to the to the public, right? So therefore you're discounting your profit margin. You're still going to sell it out, right? So in this case, right, each item is going to be sold at $6 instead of the original cost it was for you. Okay, so in this case, right, if it cost me $2.50 per hat and I sold 10 of them and I need to update my inventory, how much is going to be my cost of goods sold?
25.
Right? Good. $25, right? Because we sold 10 at $2.50. Now, like I've mentioned before, that's what it cost me, $2.50. I'm not going to be discounting the cost it originally cost me to sell these items. All right, I'm only discounting my selling price. Okay? So in this case, right, it cost me $25 to sell 10 hats. Okay? And that's it. So in this case, I'm just only tacking on one more entry here is the entry to update my inventory. And that's it. All sales from periodic and perpetual are identical. The only difference here is that I need to update my inventory. So I need to place that amount right here because I sold 10 items. So therefore, I need to reflect that I got rid or I sold 10 items and update my inventory. Okay. Any questions here? Okay.
Say again, what was what was the difference between periodic and perpetual? Is it one you're journaling the cost of goods sold and the other one you isn't? Can you refer
So
back to that?
periodic and perpetual inventory, right? Especially when we're dealing with sales, they have identical journals. The only difference is that perpetual inventory, you need to update your inventory. So therefore, you need to throw in that cost of goods sold as extra. Okay,
Okay, got it. Thanks.
right? So then we also have to look at what happens when we have customers that place their charges on an account, all right, that we sell it to them on an account. And we have a choice to allow them, to give them an incentive, right? We can give them terms, right? Saying, hey, if you pay me back within 15 days, right, then you get a 5% discount. If not, the entire bill is due in 30 days, all right? So in this case, right, on July 1st, a customer wants to buy in bulk 100 baseball hats from your store, okay? So, of course, they place it on an account, right? And of course, each hat right now at original selling price is $10 each, all right? but it cost you $2.50 each. And we gave them terms of 5%, 15, net 30. So in this case, right, we also charge them an extra additional delivery charge of $10 to ship it out to them. Okay? So in this case, how should my journal look like? Okay, so let's focus on the sales first. I'm selling to this customer on an account.
You use accounts receivable. And then you're going to credit sales and sales
Good.
tax payroll.
Right? Because we're given terms, you're not going to take the discount yet. It's a condition. If they pay you, then you take the discount. If they don't pay you, then you don't take the discount. So in this case, we're only recording this, right? Plus the delivery charge, because this is an addition to the total cost. Or it's in this case, the total sales. So in this case, right, my sales, if I sold 100 hats at $10 each, what's my total sales? $1,000. What's my total sales tax on those $1,000? $82.50, all right, plus my $10 convenience charge or delivery charge. So in grand total, this customer owes me $1,092.50. Okay. Now we sold the item to this customer, right? Now we need to update our inventory. If it cost me $2.50 per hat, how much is it going to cost me to sell 100 of those hats? $250, right? We're going to recognize the cost of goods sold, right? How much did it cost me to sell those items? And we're going to update our inventory, which is the hats, for $250. Okay. Now, let's go ahead and say, well, customer A, right, decides to pay on July 12th, which he is within terms. So, therefore, he gets a discount, all right? So, in this case, how am I going to journalize this discount if he's going to pay me in full?
The discount would be $54.63.
$54.63. How did you get that number?
I times the I forgot. I times the let me see. He returned.
No returning. There's no returns. He's just paying for the full amount.
I times the 5% by something. I forgot. I think the 10.
All right. So when we look at 1092.50, right? What does that include that you cannot discount?
Oh,
you cannot take a discount on tax good, and you cannot take a discount off of delivery. So in this case, what can I discount?
just the
Correct.
the sale of the hats.
All right. So then.
Right. So the sale of the hats
Correct.
was $1,000. And so you're going to minus the delivery cost, and you're going to give them a credit on the extra tax.
Yes, you have to give back. Correct. So in this case, right, we're going to recognize this, right? We're giving them back cash, right? Because they're paying us, right? Or I'm sorry. The customer is paying us, right? They're paying us with cash. for their total bill that they owe us. But they get a discount off of that. So they're not giving us the full amount because they're giving me 5% less, right? Off of this total sales. And of course, because I charged them originally for the full tax amount, I have to now give them a portion of the money back. Because I originally charged them for the full amount. But because they're getting $50 less, I have to give them back some of their money because it's their money. So in this case, right, how much was my sales discount for? $5 of 1,000. So what is that?
950.
$50, okay. How much tax am I going to give them back based off of $50?
$41 and
$4.13. Correct. So that's exactly what we're going to do, right? We know that this customer owes me in grand total for the $1092.50, right? But I'm going to discount them for $50 because they met the terms. So that's the 5% discount. I had to give them a portion of the tax back. So therefore, customer A is going to pay me for this transaction $1038.37.
How did you get the
I took the difference between the $1092 minus the $50 and minus the $4.13. Okay.
Okay.
All right. And because I gave them a discount, right? Does that affect my inventory? No.
No.
Sales discount is only directly correlated with the selling price. Has nothing to do with my inventory. So therefore, I don't need to put anything in my inventory. I'm not discounting my inventory. I'm only discounting my sales price. So in this case, that's all I need to know. Okay? So chapter review. Oh, go ahead. Was that a question?
Can you go back to that section? I was just wondering, where is this tip? Okay, 1038.37.
It's the $1092.50 because that's what they originally owed me, right? So even if they didn't pay me within 15 days, that's how much they would have to pay me regardless. But in this case, they paid me within the discount period. So therefore, I have to grant them their 5% discount. So 1092.50 is what they originally owed me. But I have to but for them to pay me, right, with the discount and the tax, I basically took my $1092.50, subtracted out the $54.13 to get me a grand total of $1038.37. That's how much cash I should be receiving from this customer.
So wait a minute, you subtracted it out and then you put
Subtract
it back
what? And wait,
in? The 1038.37. So that's the amount less the $50 and the $4.13, right?
from the
The 1030
the 1038.37 is the 1092.50 less the 54.13.
Okay, so you took it out and then you put it back in?
No.
Because the 1038.37 is the amount less the 54.13, right?
This number, the 1038.37, is the discounted amount.
And the discount is the less the shipping
Correct.
cost and the tax. I'm sorry, less the discount
Right. It's
and the
only on the sales
tax,
price.
right?
Yes.
So you took it out and then you put it back in with this you on here, you the 1038.37. That's the amount less the sales discount and the tax, right?
All right. When you say put it back in, that's not right.
Because
It's
it's
it
back in. It's back in with the
in
54.13,
this
right?
case, no, because they originally owe me 1092.50. What I'm not putting back anything. I'm taking it out. So
So yeah, you took it out to get the
correct.
1038.37. You took it, but then you're putting it back in right here with the $50 and the 413.
I'm not understanding why you're saying putting it back in. I'm not putting back anything in. I'm just taking it out and that's it. Because
Okay.
they owe me. Remember from the very first one, they owe me 1092.50. That's it. No questions asked. That's what they owe me, right?
Right.
And in this case,
Okay. So then you
I'm only taking out the $50 for the discount and the $4.13 to give me them get paying me 1038.37. There's no putting back anything.
Yeah, you are because it's right there for the $50 and the 413.
Where am I putting this back into?
Right there where it says sales tax $50, sales tax payable $4
Where
and
am I
13
paying that
cents.
into? What because you said I'm putting that back in. Where am I
Oh,
putting it
okay.
back in?
Okay. All right. Okay, I see it. I see
Okay.
it. My bad.
Cuz
So the 10th, okay, so the total, okay, I get it. The 1038.37 plus on, so that's how it balances out with the
right, because that's what
1092.50.
they originally owe me. I'm taking so these are contra accounts, right? These are what's
Mm-hmm.
canceling out or decreasing the amount that they owe me. So I'm taking these amount
Okay.
out from my accounts receivable to reflect that this is how much that they actually owe me now. This is the discounted amount. So in this case, I'm only taking out. I'm not adding or putting back anything in. Okay.
Okay, I get it.
All right. So chapter review. Once again, here we're taking a look at what we learned today. So we learned how to, or in the first section of chapter 7, we got to take a look at how we record a purchase, right? Now this is the section that we learn about how we deal with when we have a sales, right? Especially under perpetual inventory, we need to record the sales, but we also at the same time need to add a second entry to update our inventory by calculating how much it costs me to sell those items. All right? So therefore to update my inventory. All right, that's what we got took a look today. And also things that all costs of goods, right, go straight into inventory. If we when we purchase items, they go straight into inventory. So therefore, any costs of goods sold come straight out of inventory. All right.
So the FOB is straight
Yes,
on board?
that's for shipping. This is because this is chapter 7 review. This is everything that we learned up from yesterday and today. Okay. So, all right, and then here, this is what happens when we had a sales returns and allowances, right? It depends on what the sale was. If they return the item and got a full refund, therefore we need to record the amount that they got a refund for, and we need to also record the items that were actually refunded for. Right? But if we give them an allowance and convince them to keep their items, therefore we don't need to update our inventory at all because we let them keep the items. It's been sold, it's gone. We're only giving them a discount off of the selling price. Okay? And then we got to take a look at what happens when we dealt with sales discounts, right? When we're looking at in store and whether we're looking at terms when the customer decides to make a payment. Then we got to calculate their discounted amount. All right, so that's that. And things that you need to make a note of is that you cannot take a discount off of sales tax or any delivery charges. All right, those are the only things that you cannot take a discount for. You can only take a discount off of the original selling price, which in this case, right, whatever sales was is where you can take your discount off of. Okay. All right. Any questions in regards to the okay. So let's go ahead and practice it with the chapter 7.4, 7.5, 7.6 exercise. So here we have this right here that we're going to journalize. Okay, assume that sales tax is 8.25% and you purchase a total of 500 cups with all costs, okay, included, that equal out to $1.36 per cup. Okay, so that's what it costs me per item. Okay, because I'm not going to deal with the inventory today yet. We're going to wait till chapter 8 to see where we calculate that amount. So in this case, I'm telling you that I purchased 500 coffee mugs, all right, or cups, and it's going to be, cost per item is going to be $1.36 each. All right, so let's take a look. Right, on April 5th, okay, you sold 100 cups at $5 each, all right, to customer A for cash. All right, so let's go ahead and journalize the first thing, which is recognizing the sales at hand. Okay, so April 5th. So what should my journal look like? Right, we're receiving cash. Good. Sales and sales tax. Okay, so in this case, what's my total sales?
500.
Right, we took 100 of them, sold them at $5 each, so $500.
I got 41.25.
$41.25. Good. So in grand total, go ahead.
What's the total? 541.25.
Okay. So you can make a note here. You can wait till you finish your second entry to do your note, because they're kind of they're correlated. They're related to each other, right? This transaction. So you can choose to whether you want to place your description here or you can wait after. Okay. So in this case, I'm going to wait till after to do my second entry, and then we'll go ahead and do the description there. So in this case, right, I sold 100 cups. So how much did it cost me to sell 100 cups?
The cost of goods sold is 136.
Okay.
And your
Excellent. So we're going to calculate our cost of goods sold, which was, if it cost me $1.36 per cup and I sold 100 of them, it's 136, right? 100 times $1.36, 136. And that's what we're going to do. We're going to take this directly out from my inventory, which was cups. Okay? 136. And here, I'm going to go ahead and make a note here that I sold 100 cups to customer A. Right? Any other descriptions you'd like to put in, whether you gave them terms, well, in this case, I sold them to customer at point of sale, so they gave me cash. Okay, so there's no terms there. If you want to add in what the cost of it cost you, whatever you'd like, you can do it. Okay, but in this case, I think this is sufficient enough. I sold 100 cups to customer A. Okay. All right, and I'm going to go ahead and also stitch the same date, just in case I look back at this and don't know what happened here. Right. So then, what happened on April 7?
So $25, 25 cups at $5 each on our
Mm-hmm.
account.
All right. And we gave them terms. Okay, so to customer B, we sold 25 cups. All right. So let's go ahead and start the first one. So it's April 7. How am I gonna journalize this? Accounts receivable.
And then credit your sales and sales
Good.
tax payable. So your sales is gonna be $125.
All right, 25 times 5, good.
And then your sales tax will be $10.31.
Okay,
And then your accounts receivable will be $135.31.
right. All right, you can choose to make the note now, or you can choose to make it later. I'm gonna choose to do it later. So in this case, right, I sold 25 cups.
Cost of goods sold for $34.
How did you get $34?
I took 25 times
Excellent.
$1.36.
Okay, and
And then
good,
cups for $30.
good. And now I'm gonna go ahead and make a note here that I sold 25 cups to customer B on account. Terms were 10%. 10%, 15 net 30. So I'm giving them 15 days to pay. If not, the whole thing is due in 30. Okay. All right. Good. So then let's see what happened on April 10.
You sold another 50 cups, $5 each. The customer received for
Okay.
cash.
So let's see how I'm going to journalize this. So it's April 10. What happened here? What should I be? I'm recognizing the sales. Mm-hmm.
Cash, sales,
Good.
and sales tax.
Cash, sales, and sales tax payable. Okay. So in this case, right, if I sold 50 cups at $5 each, what's my total sales? 250. What is my tax?
2063.
2663.
I got 20.625.
Okay, yeah. 20. There's 63, okay. So giving me a grand total of, it's 270.63. Okay. Right? So therefore, I need to update my inventory. So how do I do that? I sold 50 cups.
I'm gonna debit cost of goods sold 68.
That's fine.
Sorry.
That's okay. Thank you, son.
And we're going to take it out of cups. Okay. So how much is my total cost of goods sold? $68, right? You're going to take your 50 times the 136 to get $68, right? And I'm also going to make a note here that I sold 50 cups to customer C, right? So then let's take a look. What happened on April 15?
Customer A returns 10 cups for a full
Okay.
refund.
So customer A is returning 10 cups for a full refund. So how should we journalize this transaction?
So you're gonna debit sales returns and allowances, sales tax payable, and then credit cash.
Good, because customer A paid with cash, so we're going to refund them with cash, okay? So in this case, right, if customer A decides to return 10 of those mugs, right? Right? If each mug we sold to customer A was $5 each, how much is going to be my total return for or refund for?
$50.
Yes, so we're going to refund them for $50. How much tax is going to be also refunded? $4.13. So therefore, in grand total, I should be giving them in cash. So here, I'm going to make a note here. Actually, I can wait till after. So, because they decided to give me a refund, or I'm sorry, they returned the product back to me and requested for a full refund. Therefore, what do I need to also include?
Inventory.
Yes, because they're returning the product back to me, so therefore I need to place it back into my inventory. So in this case, they're returning 10 items. Okay. How much did it cost? Is it gonna cost me per item? $13.60, right? $1.36 per cup, and I'm getting refunded. I'm sorry, I'm returning $13.60 and I'm putting it right back into my inventory. So in this case, I'm going to go ahead and make a note here that customer A returned 10 cups for full refund. Okay. All right, let's take a look next. Okay, so customer A, we did their return. So then what happened on April 20th?
Customer C returns 25 cups, but is willing to accept 50% discount.
Okay.
So we're gonna journal sales returns and allowance, sales tax return and cash.
Yes, because customer C also paid in cash. So in this case, that's exactly what we're doing. But in this case, right, we're not refunding for the full amount. We're only refunding a section or a portion of it, right? We're giving him a discount. So in this case, right, he's attempting to return 25 of those mugs, right? If they originally cost $5 each, or I'm sorry, selling price is $5 each, right? But I'm only giving them a 15% discount. So in this case, what should be my total allowance here?
So you multiply $5 times
Correct.
25, correct? So that would be
All right, but
125.
I'm only giving him 15% back.
And yeah, and then from there, then you take
Mm-hmm.
the 15% and the amount, the that's it.
$18.75. I'm only giving him back 15% off of the 25 mugs that he's attempting to return. So I'm giving him an allowance for $18.75. So therefore, how much tax should I be giving back as well?
The sales tax on that is 155.
All right. So in grand total, how much cash am I refunding to customer C? $20.30. All right. Now, question to you: do I need to update my inventory?
No, because he didn't return.
Right.
the
We
cups.
convinced him to keep the cups, but also grant him a 15% discount. So in this case, I don't need to have a second entry to update my inventory. So I'm going to go ahead and comment here that I gave customer C an allowance, okay, for 15% discount on 25 mugs. I'm sorry, cups. Okay. All right, last but not least, on April 22nd, okay, customer B decides to pay for his purchases and he meets the discount period, right? So on April 7th, right, we sold the 25 coffee mugs, cups, $5 each, and we gave the discount terms to be 10% if he paid within 15 days. So 15 days from the 7th is, in fact, the 22nd of April. So therefore, he gets to receive a 10% discount. So let's take a look at how much customer B owes me in the first place. So customer B, right here, account receivable for $135.31. So in this case, right, they get to receive a 10% discount, all right, off of the 25 cups that we sold to customer B. So in this case, right, how should I journalize this transaction? All right, assuming that they paid me in cash for their amount that they owe me.
And we're assuming they paid
You're
in
gonna,
cash,
yes.
okay? So it would be cash, sales discounts, sales tax payable, and accounts receivable.
And what was this, the last one?
Yeah,
Yes,
accounts receivable.
correct, right? Because they're paying off what they owe me. In this case, right? So therefore we need to reduce their IOU because they're paying it off. We're going to be receiving cash on the other side. Okay? So, let's go ahead and confirm, right? How much do they owe me in grand total? You can always start there. How much do they owe me in grand total? 135.31. Okay? So 135.31. Now, we sold 25 cups to customer B, all right? And they met terms, so the terms was 10% discount. So what's going to be my total discount here? $12.50, right? We're going to take the 25 times 5, which is 125, and we're taking only 10% of the 125, which gives us $12.50, right? So how much tax am I going to be returning as well for the $12.50? $1.03. So therefore, in grand total, how much cash should I be receiving from customer B? $121.78, right? We're taking the amount that they originally owe me of $135.31. We're subtracting out the discount and we're subtracting out the tax to get me the grand total amount that I should be receiving from customer B. And I'm also going to make a note here that customer B paid in full, receive 10% discount. Okay. Excellent. All right. Good job. All right. Any questions in regards to the chapter 7.4 all the way to 7.6 exercise?
No.
All right. All right.